Just last week, the Federal Reserve indicated higher interest rates are coming as soon as next month, with several more possible throughout this year. Financial experts advise consumers to be ready, and topping the list of the money moves you should make is to refinance. So the big question is, who should refinance? Joining us this morning, Brandon Hafele, CEO of Catalyst Mortgage. Brandon, thank you so much for being with us. As always, such an important topic, and we need to get the inside scoop from you. So just in general, we are going to get specific, but in general, who should consider refinancing right now?
Well, really, it's going to come down to your individual scenario and really where you plan on being in the next 2, 3, or 4 years. Really, it's case by case, but at the end of the day, with rates going up, and with the market shifting, you really want to look at your individual scenario.
Especially if you're looking at savings, because with California, the average home price being so high on average than across the country, going from a 3% to a 4%, which it could be by the end of the year, could mean hundreds of dollars of savings per month for homeowners.
Yeah, you're really talking median home price is about $835,000 in California. So even a 3% to 4% increase, if you're putting 20% down, is actually like $370 a month. And really, if you're going to be putting less down, which most people do because you don't need that 20% down payment, you can put 10%, in some cases 5%. The payment difference could actually be, upwards to $450 or $500.
That's significant. Let's talk about adjustable rate mortgages. Should you refi if you were able to buy a home with an ARM, so you were able to put possibly less money down, have better savings per month? But when you start to think about that rate is not fixed, it could get scary in the long term.
Well, it really can. And so I would say that if you're an investor or you're, strategic, where you plan on, only being in the home a few years, an adjustable rate might make sense. But if you're planning on being in the home long term, I had my first loan as an adjustable rate, and 5 years or 7 years, that flies by quick. So really, if you plan on being at home longer term, it's worth locking in since rates are still really low. But it's also important to know with adjustable rate mortgages, the interest rate can rise quickly as the Fed raises rates. So it's better to be ahead of the game and look at that right now to see if you can actually lock in something low that's fixed.
Really good point. What about those who got second mortgages on their home in the terms of a home equity line of credit?
Right, that's actually a great point, because right now with adjustable rate mortgages and HELOCs, interest rates on those are tied to the Fed, especially the adjustable component. So as the Fed raises rates, that's one of the first things to go up: adjustable rate mortgages, credit cards, car loans. So those are the types of things. Any variable debt, especially since inflation is up, any variable debt that you can consolidate, you can actually save some money on by putting it into one low monthly mortgage payment. It actually might be tax deductible then for you as well.
This is hard to imagine, but there is a positive here. Sacramento home buyers could actually benefit from these rising interest rates. How?
Well, this year to last year, right now, 67% of offers that are accepted had multiple offers. That's up from 60% last year. So now that we're seeing interest rates rise, we should see some home buyers that maybe have been on the sidelines actually say, I don't want to do it at all, or I'm not going to even try to buy right now. And so less people that are actually looking to purchase might make it a little bit more competitive, or might make it, the ability for other people that have been on the sidelines to finally come in. But really, it's one of those things that look where you're at, look at your financial position, and see if either purchasing or refinancing is right for you right now.
All great information. Brandon Hafele, CEO of Catalyst Mortgage, helping us with strategies for these rising interest rates. Thank you so much. Take care.